Good morning. Welcome to this video lecture on the subject corporate administration. And the topic is small company and foreign company, which is a sub part of the first chapter, Introduction to Company. This is Chand Pasha, working as assistant professor, Department of Commerce, Government First Grade College, Hoskote. Dear friends, we have been discussing continuously on the classification of companies. So far we have seen many classification, and this is the last type of classification of the company, that is we call other types of company, where we have six types of company: small company, foreign company, global company, body corporate, listed companies, and banking companies. So this is the last category of the companies, that is other type of company, where we have six category or six types of company. In this video lecture I will be covering the first two, that is small company and foreign company. So this session we will be discussing about the small company and foreign company. In my next session we will be discussing about the remaining part, that is global company, body corporate, and listed companies. Let's begin with the first one, small company. The Companies Act 2013 has introduced the concept of small company. It is not specifically registered with the specific name, but it is simply a private company with less amount of investment and less turnover. And in a developing country like India, such company plays a significant role. A small company did not have to carry a word small company. A small company itself is basically a private company. Two conditions are needed. One is less amount of investment and less turnover. Let us understand what is small company from the Company Act point of view. Small company under Companies Act 2013. According to Companies Act 2013, small company means a company which satisfies the following two conditions. Means to say, a small company shall be considered as a small company provided these two conditions need to be satisfied. Let us see what the two conditions are. First condition, it has paid up share capital of not more than 50 lakh. Not more than 50 lakh means it is less than 50 lakh. Means the share capital should be less than 50 lakhs. The second condition is it has annual turnover of not more than 2 crores. Not more than means again less than 2 crores. It means to say there are two conditions. First condition is share capital has to be less than 50 lakhs and annual turnover has to be less than 2 crores. So any company which satisfies these two conditions, then such company is called as small companies under Companies Act of 2013. To become a small company, a private company has to fulfill these both the conditions. What are those two conditions? First condition is paid up share capital has to be less than 50 lakhs and annual turnover has to be less than 2 crores. So any private company we satisfy these two conditions, then such company is called as small company. Then exception in case of small companies. It means to say following companies do not fall under the category of small company, and exemptions or relief to small companies are not available to them. Mean to say there are four such companies which are out of the meaning of small companies. The first is public company, holding company or subsidiary company, company registered under the section 8 of Companies Act of 2013, and a company or a body corporate governed by the special act. The above companies, even if they meet the criteria of the capital and turnover, what the criteria of capital? Less than 50 lakh, criteria of turnover less than 2 crores. The above four companies, even if they fulfill those two criteria, then also they shall be outside the purview of small companies. That is, they will not be considered as a small companies. Accordingly, benefit available to small companies cannot be taken by those companies. I said you in the beginning only, any company which satisfies the two conditions, they shall be known as the small companies. Condition are private, paid up capital should be less than 50 lakhs and annual turnover should be less than 2 crores. But these two conditions are not applicable for these four companies. Even in this case of four companies, even they, if they satisfy those two conditions also, they shall not be considered as small companies. What are the four companies? One is public company, holding company and subsidiary company, company registered under the section 8 of Companies Act, and body corporate governed by the special act. So these four companies are not coming under the meaning of small company even if they fulfill both the conditions. Then what are the special features of small company? A small company is a private company. Yes, in the beginning itself I told you, a small company is just mere a private company. It has a limited area of operation and it has few number of employees. Then Companies Act provides certain benefit only for small companies. It hold a limited amount of investment. Amount of investment is less than 50 lakhs and it has a separate legal entity from its owner, which is a feature of all the joint stock company. Then status of small company may change from year to year as the capital and turnover changes every year. Less than 50 lakhs, it is known as small company. If the capital is more than 50 lakhs, then it will be converted to some other companies. So therefore, the status of the company keep on changing every year. Now let us understand what are the special privileges available to a small company. That is signing of annual returns. Like any other companies, the annual returns of a small company can be signed by secretary alone. Just secretary alone can sign, is enough to sign the reports of the small company. If the company don't have the secretary, then one director, a single director can sign the annual reports. Board meeting. See, for every company, it has to conduct 4 meetings in a year. But these rules of conducting 4 meetings is not applicable for small company. Therefore, a small company can conduct only 2 board meetings. 2 board meetings enough instead of 4 meetings. Financial statement. See, every company as per the provision of Companies Act 2013, apart from financial statement, they have to prepare cash flow statement. But preparation of cash flow statement is not compulsory for the small companies. Rotation of auditor. An auditor has to be based on rotation basis. That is, in case of individual, auditor has to be rotated in every 5 years. But this provision is not applicable for a small company. And matters to be included in board report. See, a small company is exempted from bringing the matters for the board report. Internal financial control. Mean to say, in its annual report, a small company need not have to report on its financial control or financial policy. Then lesser penalty for small companies under section 446B of Companies Act. What does it mean? It means to say, if the small company fail to do or fail to comply with the provision of the Companies Act, then the penalty on the company or penalty on the officers of company will be lesser when compared to that of other companies. Fast track mergers. A small company can merge with another small company, and the procedure is very simple, so therefore we call this as fast track mergers. And professional certification for e-form to be filed with Ministry of Corporate Affairs. Now small company need not have to go for e-certification or e-filing. Now what is foreign company? See, every country has a particular rules and regulation applicable for the home companies. Similarly, a company operating in a country other than its home country is required to follow the rules and regulation of the local area of operation and home country where it was originally incorporated. In India, foreign company is mandated to follow certain special or modified provision as compared to that of a domestic company. For example, a foreign company at the time of making investment in India or setting up an office in India is required to follow the rules and regulation of FEMA, that is Foreign Exchange Management Act. Let us understand now what is the meaning of foreign company. A foreign company is a company which is incorporated outside India but has a place of business in India or conduct any business activity in India in any other manner. Mean to say, foreign companies are those companies which are registered, which are incorporated outside India, but they have the place of business in India and they are conducting the business activity in India in any other manner. Definition of the foreign companies under Companies Act of 2013, as per section 2 subsection 42, foreign company is a company or a body corporate incorporated outside India and which has a place of business in India, whether itself or through an agent or physically through an electronic mode, and conduct any business activity in India in any other manner. So therefore, a foreign company is incorporated outside India but have the place in India, and the word electronic mode has been recently added to the Companies Act. What is electronic mode? Electronic mode means electronic based transactions. Electronic mode means electronic based transaction such as a business to business or business to consumer transaction or data exchange or other digital supply transaction. It further includes all type of online services and all related data communication services, whether conducted by email or mobile device, cloud computing, social media, and data transmission and otherwise. So all these are considered as a electronic mode. Let's have a session summary. In this video class, we have seen the last category of classification of company, that is based on other types of company, where we have 6 categories or 6 types of company. In this video lecture class, we have discussed about a small company, its features and special privileges enjoyed by the small company, and foreign company and what do you mean by electronic mode. That's all I have in this video session. Stay home, stay safe. Thank you.